Good afternoon and welcome back to this Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha Darad. And it has been a strong day of rally, strong bull run, and it looks like the festive cheer is on us and it's on the Lal Street as well, because Nifty is now up for the second consecutive session and it has mounted strongly above that 25,600 mark as well. So we did start off with 25,350 and then swiftly moved on to 25,400, reclaimed those levels of 25,500, and now it's in the last 10 minutes or so, we are back above that 25,600 as well. Sensex also soaring in the trade, 1,000 points uptick coming in for Sensex as well. Nearly a percent, more than a percent gains coming in for both the frontline indices. But if you look at the sectoral indices, all of them have been in the green, strongly in the green, barring your PSU banks, which is taking a bit of a profit booking, 0.2% declines coming in for there as well. However, if you look at majority of the sectoral indices, be it your Bank Nifty index, Auto Index, IT Index, all of them are showing good gains at this point of time. Realty Index also nearly with about 2% gains as of now. India VIX has also seen a little bit of a spike up, 4% gains coming in from there as well. On the other hand, if you look at the broader end of the markets, they've been underperforming the frontline indices, but all in all, both of the broader end of the markets have been on a strong footing as of now. But yes, coming to the gainers and losers, where we stand as of now, Nestle towering the trade with about 4% gains. Definitely this comes on the back of its Q2 performance as well, and where the management has also indicated that the input costs are expected to soften from here on. Tata Consumer Products also doing well, 3% gains coming in from there as well. Kotak Mahindra Bank with about nearly 3% gains. Titan also doing well with about 2.5% gains. Axis Bank on the back of its Q2 performance doing well with about 2% gains as well. So all in all, these are the top gainers that is coming in from the Nifty 50 index. But on the flip side, if you look like the converse picture, HDFC Life seeing one of the top laggards of the Nifty 50 with about 2% cuts coming in from there as well after its Q2 performance, wherein the management has indicated that their Q3 margins is where the recovery could be possible, given that they're seeing some margin drag on the back of GST input tax credit loss as well, and that is why the stock has taken a beating. But overall, the management has given out a good guidance, early mid-teens growth for FY26. They expect the margin recovery to happen by the end of the fiscal year as well. On the other hand, if you look at other financial stocks and of course some insurance stocks, given the HDFC Life has been taken on a back foot, SBI Life is also not doing well with about 0.5% cut coming in from there as well. Shriram Finance also exhibiting a loss of about 0.7%, and Sun Pharma also showcasing a loss of about 0.4%. But yes, let's understand how the last minutes of the trade looks like and the way ahead. I'll go across to Kunal, Rambhia, fund manager of the streets, who will be joining and explaining us what the way forward looks like for the markets as well. All right, Kunal, good afternoon. Strong day for the Nifty. It's above the 25,600 mark. What lies next?
Good afternoon, Lovisha. Thanks for having me on the show, and good afternoon to all our viewers also. So yes, after a broader consolidation of almost 5 months, I think Nifty is now showing that first breakout sign of this broader consolidation, and Nifty is right now trading at 25,600. But I think the range bound movement is coming to an end, but we are still waiting for one more day's confirmation. That's going to be tomorrow or on Monday. So if the Nifty continues to march forward, considering 25,000 as a good support, the next level to watch out will be the all-time high, which is 26,200 plus levels.
Okay, all right. Kunal, but Bank Nifty also doing well, soared over 600 points, just 100 points away from its all-time high. How do you see the next moves coming in from there?
Absolutely. So Bank Nifty has massively outperformed. In fact, as you rightly mentioned, it's near to its previous high. But the trend is absolutely strong. In fact, today was a gap up open and the continuation of the previous rally. So yes, extremely bullish on Bank Nifty also. Support can be placed at around 57,000 levels or 56,750 levels. And the upside targets can be 58,500 to 59,000.
Okay, all right. But we'll be also watching out for some numbers as well, given that Axis Bank has reported some figures as well, and we'll be having HDFC Bank and ICICI Bank over the weekend as well. But coming to one of the top sectoral movers of the day, that is your Nifty Realty Index, 2% gains coming in there. And yesterday also we saw that the Realty Index stood tall in the upbeat market sentiment. But Kunal, coming back to you, Nifty Realty, how does it look like on the charts? Good gains for the second consecutive session.
Absolutely, Lovisha. It's looking good from the short-term point of view, but if you look at the broader consolidation from the beginning of this calendar year, that's Jan 2025 so far, it's more or less in the range itself. On the lower side, index made bottom somewhere near to 840 levels, and on the upside, I think 1000 was a level where it consolidated and again came back to the previous bottom level. So I think it's sideways consolidating right now, though the momentum is picking up. But I will not be really keen to jump onto this and start accumulating this. I think the breakout on the index is still pending. 950 levels is something to watch out for. Above that, the short-term breakout is confirmed. Positional rally will begin about 1000 levels. So yeah, it's 11% away from those final breakout levels. But the first breakout is also, I think, 15, 20 points more to go on the upside. Though as of now, staying away from the realty, though it's shortlisted, but not initiating any buy.
Okay, not initiating any buy for the time being. But yes, let's talk about some individual movers of the day as well. We'll talk about first about Nestle, one of the top Nifty gainers, and the company did report a volume growth in about high single digits during the September quarter, which came in well above what the street was estimating. But the management has indicated that the milk prices, coffee prices, and edible oil prices are expected to stabilize from here on. So all in all the input costs could be normalizing in the upcoming quarters. Kunal, so far this year also the stock has exhibited good moves. Today the stock is doing well in response to its Q2 performance. What is the next level that we can watch out for?
Yeah, again, Lovisha, let's just look at the absolute price action behavior of the counter. October 2024, counter was near to 1250 levels. And since then, October 2025, counter was consistently facing resistance of 1240, 1250 levels. Today is the first day where it has given the decisive breakout with really good volumes. So yeah, it seems like a first breakout sign. But again, follow through buying is equally important. And on the upside, the levels can be, the targeted levels can be around 1380 to 1400 levels. So if someone has already initiated a buy, keep the trailing stop loss of around 1240. If someone has not really initiated a buy, wait for the follow through buying and initiate the buy with the same stop loss. I think new high, or say at least the previous high, which is 1380, is very likely on the charts.
All right, 1300, that is what the next target could be for Nestle India. We'll be watching out for those moves. But let's move on and talk about Axis Bank because that stock has also been doing well. 2% gains coming in for the counter after brokerages were quite bullish after its September quarter performance. Now, what the brokerages have been saying, HSBC have maintained a buy call on the counter, saying that the loan growth, margins and asset quality were quite strong, although the one-off provisions were a disappointment. But these three metrics were quite strong from the September quarter. Even Jefferies has also raised the price target on the counter because they believe that the valuations are quite attractive from the current levels. But yes, from a chart perspective, Kunal, the stock did well and it's off 13% from its September lows.
But again, April 2025, counter actually slipped down from 1230 levels. Similar levels were seen somewhere in June 2025, where the counter declined after making the high near 1240. And look at the today's high again. That's near to 1216 to 1220 levels. So this 1220 to 1240 levels is consistently acting as a resistance since last 6 to 7 months. So I think this is a time to, for time being, turn cautious. If the counter manages to break this 1225 mark on the closing basis, then yes, just go ahead and one can initiate a buy. Stop loss can be 1200 and the targets can be 1310 to 1320, which are the previous highs. But otherwise, at this point in time, I'll turn a bit cautious on the counter.
Okay, you're quite cautious on Axis Bank as of now. But yes, let's move on and talk more about stocks, which is expected to report its Q2 results. That is your emphasis, and sometime we'll be watching out for numbers as well. Kunal, we did see TCS, Tech Mahindra, HCL Tech, all of them reported Q2 beat, which was a beat performance. But what lies next for emphasis? Today it's trading sideways while all of the other names are trading flat with a negative, positive bias.
See, absolutely, Lovisha. This counter, I mean, obviously, post result only, I think the new move can be seen on this. But the interesting observation, which we have come up with the in-house report, is that the counter is down by 27% from its high. That's number one. It's consolidating near the lows itself, and if you can check out the recent lows of last 3 to 4 months, the extreme lows were 1400 and the highs were around 1550. It's consolidating between that level itself. And the last 10 to 11 years positive trend is still absolutely intact. So it's a bargain buying opportunity. And looking at the other companies' performances, I think no wonders here also we can get good buying opportunity from long term point of view. So positional stop on this entire view on Infosys is around 1400. If the counter slips below 1400, we'll have to take an exit. But otherwise, this can be good level to accumulate from the long term point of view. And the positional targets can be 1750 to 1800 rupees.
Okay, 1800 rupees for Infosys could be the positional target. All right, let's move on and talk about L&T because that stock did not do well that much because it's marginally up at this point of time. L&T Finance, that's what we are talking about first because it came out with its Q2 performance, and right now the stock is showing a bit of a sideways movement, nearly 0.8% decline. We did see that the company has reported about 6% rise in consolidated net profit for the quarter, and revenue has also risen by about 8% on a year-on-year basis. The lender has also reported about its highest ever quarterly retail disbursements as well, and asset quality remains quite stable. But yes, Kunal, some sideways movement today, but so far this year the stock is on a secular uptrend. What can we expect? Can we expect this to remain intact?
Absolutely. This year was really wonderful for the counter. In fact, from Feb lows, this counter has almost doubled. Somewhere in the Feb, it was trading near 135. Right now, it's at 270, and the trend is absolutely intact. In fact, we could accumulate this counter somewhere near to 179, 180 levels where the uptrend got confirmed. We are still holding on to it, and the trailing stop loss for this is around 250. If the counter breaks below 250, 245, 250 zone decisively with heavy volumes, then it's an exit. But otherwise, this counter can be accumulated even for the further rally because there are no selling volumes on the charts. So yeah, it's a clear thumbs up, and every correction till 250 can be considered as a buying opportunity.
Right, every correction till 250, and the stock is exhibiting no negative and no selling volumes as of now. So that's coming as a bullish counter for L&T Finance going ahead. But yes, let's talk more about more stocks which have reported its Q2 performance. That is your Kajaria Ceramics. The stock is doing well, 1%. The stock is doing well. It is showcasing a gain as of now. But if you look at the net profit, that has risen by about 58% on a year-on-year basis. Margins have expanded by about 400 basis points. EBITDA has grown by about 31% from a year-on-year perspective. Coming from the Q2 performance has been quite upbeat, Kunal, but on the charts, how does Kajaria Ceramics look to you?
See, being very honest, Lovisha, I am not tracking this sector as such, but giving the pure view on the basis of technicals. So as of now, yes, good volumes were seen on the chart, and then the counter went into sideways consolidation. I think 1160 is looking like a strong support, which it has held on to since last 3.5 to 4 months. Any uptick above say 1275 will open the doors till 1500 levels. So yeah, extremely bullish chart formations. One needs to keep the stop loss, and that's gonna be around 1150 below which I think one needs to take an exit. Otherwise, this counter might deliver better results. I mean, better performance going forward also.
Okay, all right. That's the view coming in for Kajaria Ceramics. We'll be watching out for that counter. But let's discuss about another stock, that is your KEI Industries, because the stock is showing a decline of about 5.5% in response to its September quarter performance. We did see that the company has reported about net profit, which has grown about 31% in a year-on-year perspective, but it has missed the street estimates on EBITDA performance, because if you look at EBITDA margins, that have come nearly flat compared to the year-ago period as well. And brokerages, they have remained quite mixed on the counter. We did see Morgan Stanley giving out an overweight call, but we had an Investec report which said that they remain quite wary on the counter because of their significant capacity addition plans and intensifying competition, which could weigh on its earnings as well. And that's why the brokerage has given out a hold rating on the counter. Kunal, not a good day for the counter, 5% downtick. What can we expect next?
See, again, this is one of the counters which we are holding as of now. The trailing stop loss is kept at around 39.75, 39.75. If the counter slips below that, because why that level? Because that was the previous bottom where the counter made somewhere in the month of October. Clear higher top, higher bottom formation is seen on the chart. In fact, from the day's low, it has recovered really well. And the volumes are also encouraging as of now. Now, if at all counter slips below 39.75, it's an exit. Otherwise, I think this might consolidate at the present levels. And if the counter manages to hold 3975, it can be accumulated from the long term point of view. The positional target is set at around 4,600, which were the highs of beginning of 2025.
Okay, so you're a hold on Kia Industries despite the muted performance today. All right, let's move on and talk one of the buzzing stocks of the day. That is your BLS International. The stock is moving up quite significantly, 15% uptick coming in for the counter, given that it has announced that it has bagged a 3-year contract from the Ministry of External Affairs. Now, the company has said that it has been awarded the contract to establish and operate an Indian visa application centers in China for a 3-year period itself. The stock is seeing good volumes. Kunal, what do we expect next for the counter? Good volumes today.
So again, this counter came into a limelight just 3 to 4 days ago when the counter made on 13th of October when the counter was down by around 11%, but extreme positive volumes were seen. I was literally wondering as to, the support of last 2.5 years is broken on the lower side. This might turn into, a further decline, but surprisingly, the volumes were positive and today is a follow through buying with extremely bullish sign on the chart. So if the counter manages to close about 310 on the weekly basis, this can be accumulated. Though, there is no buying call as of now. In-house also, we have not really shortlisted this counter. But if someone is holding, then with the stop loss of 310, one can hold on. Fresh short-term entry can be taken with the stop of 310. The targets can be 375 to 380, looking at the weekly charts.
Okay, all right. BLS International will be watching out for that counter as well. Let's move on and talk about Indian Bank. The stock is not doing well despite the company has reported about 11% increase in its net profit for the September quarter, while the NII has risen modestly by about 6% on a year-on-year perspective. However, on the asset quality front, it has been showcasing a stable asset quality because if you look at GNPA, that has declined to about 2.6%. Net NPA ratio has also improved for the September quarter. But yes, the stock is down today, 0.3% cut coming in from there. But yes, Kunal, is it expected that we are seeing some profit booking on the counter given that so far this year the stock has done quite well?
Absolutely. In fact, from March lows of around 500, this counter has gone up to as high as 800. It's the first time we are witnessing selling volumes because the counter is trading near the low. Any further decline can be the sign of the exit on the charts. So support can be placed at around 760. Any closing below 760 will be a temporary exit from the counter. Then probably we'll have to wait for the new formations to come in. But yeah, this is the level to turn cautious looking at the today's behavior.
Okay, all right. That's the stock we need to watch out for. Let's move on and talk about HDB Financial Services. The stock is once again down, nearly percent cut coming in for the counter after its second quarter performance. Now, this is the company's first results post its listing as well, where we have seen that the net profit has declined by about nearly 2% because of higher provisions that has increased sharply during the quarter. Sequentially, however, also the profit was up about by 2.4% and net interest income has risen by about 19%. Brokerages, however, remain cautious on the counter. But Kunal, what is next? The stock has been trading below its listing price and below its IPO price as well.
Lovisha, the interesting part is that when the price stops declining below the previous levels, previous bottoms, that's where the first shortlisting criteria gets satisfied, right? So, yes, the counter is down by around 18% from its all-time high, and it has halted near the previous low somewhere, which we saw somewhere in the month of August. And now, if the counter consolidates at the present level and goes above 750 mark, then I think that can be the first sign to think of accumulating with the extreme low as a stop loss. I don't know whether it's gonna get into the uptick or whether it will start its uptrend higher top higher bottom formation. But yeah, this is the level where we are getting extremely favorable risk reward ratio with the downside being around 20 points, upside can be the previous high again. So extremely bullish as of now, looking at the formations in anticipation of the previous bottom being taken care of. But any decline and below the previous bottom, which is around 725, will be again an exit on the counter, and then probably we'll have to wait for the new bottom formations to come on charts.
Okay, all right. That's the view coming in for the counter as well. Let's move on and talk about Oberoi Realty because the stock has done quite well today. 5% gains coming in for the counter after it reported about 29% increase in its net profit on a year-on-year basis, and revenue has also increased by about 35% on a Y-on-Y basis because of its strong demand, which was witnessed across its residential and commercial projects. Kunal, I know that you're saying that you're not initiating any coverage for the realty space as of now, but for Oberoi Realty, anything that you would watch out for in the upcoming days?
Absolutely. 1700 is a level to watch out for. If the counter manages to cross 1700 and stays above that for a day, for one more day, then I think the doors are open till 1950 to 2000, which we saw as a level somewhere in the month of July. So yeah, extremely bullish on the formations and the today's price action specifically. With the stop of 1525, one can go long above 1700, and the targets can be 1940.
Okay, all right. 1940 is the next target that we can watch out for Oberoi Realty as well. All right, let's move on and talk about Delta Corp because the stock didn't do well for the most part of the day. But right now, we are seeing some bit of a recovery from its day's low. And right now, it's trading with about flat with a negative positive bias. Right now, in the charts, it's showing about decline of about 0.1%. But yes, the company did see a net profit decline of about 7%. Revenue also largely remained flat. Operating performance also weakened during the quarter. And the stock has largely underperformed so far this year. Kunal, can we expect further downside? It has recovered from its day's low as of now.
See, Lovisha, honestly speaking, this counter has not done anything in last 3 years. In fact, from Jan 2022 highs, this counter is down by around 75%. Though there was some encouraging volume seen somewhere in the recent times, that was in the month of August, mid and August, September beginning, I guess. But again, there is no uptick at all. So I would stay away from this. And in fact, on a friendly note, I would advise our viewers also to keep this counter not even on the watch list, unless this counter makes a decisive higher top higher bottom formation, which is not really seen in last 3 years time. So stay away from this counter. Any short term trade can definitely be taken with some kind of stops, but a positional rally on this counter is ruled out unless this counter reclaims 100 or 105 levels.
Okay, 100, 105 levels reclaiming is important for Delta Corp then. All right, let's move on and talk about Angel One. The stock has been up despite it reported about a 50% year-on-year drop in its net profit for the September quarter. And revenue has also declined by about 20% itself. But yes, Kunal, past 1 month, the stock has been trying to do well. What lies next for the counter? Today also the stock is up about 1%.
So interestingly, observation on Angel One is Lovisha, this counter is not breaking below 2000 mark. In fact, September 2023, the bottom was 2000 levels. Again, July 2024, the similar bottom was seen on March 2025, and the recent bottom was again 2000. So that level is acting as a very strong support. In fact, from that level itself, we recently saw the bounce till around 2500. So yeah, it's consolidating near the highs and available near the support zone itself. Any decline near to say 2250 to 2275 can be a good buying opportunity with the stop below 2000, and the upside target can be at least 3300 to 3400 looking at the last 2 years behavior. I'm extremely bullish on it. We are holding this counter even on our long-term portfolio as well as short-term momentum portfolio also, and we expect to remain we expect this counter to deliver 3300 levels as the first target for the momentum trading.
Okay, all right. 3000 levels, that is what the next target that you're watching out for Angel One. All right, let's move on and talk about Paytm because the stock did hit a 52-week high today, but right now it's trading with a negative bias. But in the past 1 month, the stock has already surged by about 16%. Kunal, what is your view on the counter? What can we expect from the upcoming days?
See, again, Lovisha, these are absolutely trending counters. And in trending counters, one needs to remember that buying in the correction makes sense. As you rightly mentioned, after hitting the 52 weeks high, this counter is down because September beginning itself, we saw the high of around 1300 levels. So that's acting as a resistance for now. No surprise if at all counter comes near 1175, 1180 levels, but the trend is absolutely strong. There is no selling volume on the chart at all. So this counter can be taken as a buy on dip counter. 1175, 1180 should be kept in mind to initiate the fresh entries on this. The positional stop on this will be around 1100 levels. Till then, keep accumulating this counter. I think the new highs are coming very, very soon on the charts.
All right, new highs could be soon coming on the charts. But yes, we'll be watching out for Paytm as well. But yes, let's move on and talk about MRPL because the stock has done well after the company returned to profitability during the September quarter compared to a net loss that it was seen in June quarter. The revenue has also increased by about 27% on a sequential basis. And Kunal, the stock has done well. It saw a good breakout yesterday itself. So can we expect the gains to extend?
I really doubt as of now. Again, for the entire year of 2025, counter has not crossed 155 mark. In fact, check out today's high also. It was somewhere near to 154 and a half. So let this counter close above 155. The doors will be open for 225 to 230 levels. But till then, stay cautious on this. Again, this counter is something which we are tracking very closely, and we are just waiting for the breakout of 150 or 155 decisively on the closing basis. Anything above 155 can be a good entry. Stop can be 140, and the targets can be 225 to 230.
Okay, 225 to 230. That is coming in for the counter as well. Let's move on and talk about Indian Overseas Bank, because the stock is down today. It's off its day's low, if off its day's high, sorry. But we did see that the counter jumped after its Q2 results, where we did see that the NII has increased by about 21% and the net profit has increased by about 58%. Kunal, what's your take on the counter? The stock did well, did see a breakout today, but then it's right now it's off its day's high and it's trading near its day's low as of now, 2% down.
Almost 8 months of consolidation, sideways consolidation on the chart, with the resistance at around 41 and the support now at around 37. I'm extremely bullish on the formations of IOB. If the counter manages to cross 41, then the previous highs of around 60s and 65s are very, very likely. Extremely encouraging volumes are seen on the chart. So I'm technically very bullish on this. I'm just waiting for the breakout of 41, and above that, with the stop of 37, one can definitely expect the counter to reach 60 and 65 levels.
Okay, 60 and 65 levels. We can watch out for those figures as well. Let's move on and talk about Ola Electric, because the stock has hit about 5% upper circuit, and yesterday also the stock did quite well on the back of its good volumes. But yes, Ola Electric, high beta stock, Kunal. But what's your take on the counter?
So interesting observation on Ola was that counter actually gave a breakout at 45, and then unstoppable rally was seen till around 70 levels. But many people actually got trapped, who did not really think of exiting on the risk on the support getting broken down. Now this counter has reclaimed those lost levels, and today's gain seems to be like the first sign of turnaround again. If the counter manages to, so honestly, we are not holding this, so keep that in mind, that it's a high beta counter, so one needs to be a little cautious on this. If the counter manages to cross 58 levels, then I think the previous highs of 68 and 70, 75 are very, very likely. Structurally, extremely bullish formations, good volumes are seen on the chart, but yes, high beta counter, so one needs to stay cautious. Risk management is a big challenge on this counter because of circuit problems. So keep your risk management in such a way that it remains within the circuit, because if at all it enters the lower circuit, you might get trapped. But otherwise, formations are really good.
Okay, formations are quite good for Ola Electric. 5% upper circuit coming in for the counter as well. Let's move on and discuss about L&T, because we've had an interesting brokerage note which has come out by Jefferies, and the stock is up by about 1% itself. Now, what Jefferies has said, that it is called the stock is a quiet outperformer due to its superior performance against the Nifty from the past 1 to 5 years itself. And they believe that the company is on track to achieve or even surpass its FY26 guidance for revenue, margin and order flow as well. L&T doing good on in today's session. Kunal, what do you think about L&T? It's called L&T as a quiet outperformer for the past 5 years.
Absolutely, but in fact, historical data suggests that this counter has not really surpassed 3,900 mark decisively since April 2024, and the range which we were trading was 3,900 on the upside and the support being 3,100. So this range gave us almost 3 to 4 trades in last 1.5 year time. Now, if the counter, so as of now, it's an exit looking at the price action behavior. But if the counter manages to close about 3,900, then it's a positional buy with the target of 4,250 to 4,300. So we are extremely bullish because the formations are positive, but due to sideways consolidation, now one has to wait for the breakout, and that's at around 3,900. So any close about 3,900 is a buy.
Okay, all right. 3,900 is a buy for L&T as well. But yes, let's discuss about one of the key results tomorrow. That is your Havells. It will be reporting its September quarter performance tomorrow. But today the stock has been quite sideways. Kunal, let's get in your view on the counter. So far this year, the stock has been an underperformer. Can we expect more downside, or how should investors approach this?
So the support on the chart is around 1,425. And the resistance is placed at around 1,625. So that's the 200 points range within which this counter has remained for the entire year of 2025 so far. So yes, it's near to the support. So one can definitely think of initiating a buy, keeping the stop loss of 1,400. And on the upside, if the counter breaks 1,625, then I think this broader consolidation will open the doors for the upside rally. The targets can be 1825 to 1850. But again, as you know, the momentum player, we always wait for the breakout. So 1625 is something to watch out as the closing basis breakout for the up rally to emerge.
Okay, all right. But yes, the last trades where we have closed as of now, Sensex is up about 800 points and Nifty is also surged by about 250 points. Nearly a percent gains coming in for the counter. It has closed above that 25,550 mark, slipped off that day's high level where we mounted above that 25,600. But yes, we're taking away 25,550 as of now. But yes, all in all the sectoral indices did settle in the green, barring your Nifty PSU banks, which is given out on profit booking with about 0.4% decline. Otherwise, if you look at autos, banks, all of them did quite well. Even IT index ahead of Infosys Q2 numbers did well with about 0.2% gains. On the other hand, if you look at pharma index, that was a little bit of an underperformer because mild gains of about 0.1%. Nifty Realty, on the other hand, was one of the top sectoral performers of the day with about nearly 2% gains coming in for the counter. But all in all, if you look at the breadth of the market and the sentiment of the market, that remains quite upbeat, given that some of the stock-specific action continues on the back of its September quarter results. And of course, we have the incoming festive cheer also, which is lit up the Lal Street on the back of that as well. But yes, coming to one of the top loser of the day, that is your HDFC Life, showcasing a cut of about 2% as of now. Kunal, coming back to you, how should we approach HDFC Life? I mean, the management has reiterated its mid-early teens growth for FY26, but it remains cautious on margins recovery.
So honestly speaking, Lovisha, we are ready with the life insurance space report itself. That's a technical report where HDFC Life Insurance is a very clear buy near 740 mark. That's what was written in the report itself, and we are yet to publish that. We're just waiting for the weekend to come in. So if someone wants to initiate a buy on HDFC Life from the long-term point of view, this is a level to watch out for. 725 can be the strong support, and that can be the positional stop on this. And the upside can again be around 800 to 825. So extremely bullish on this based on the risk reward ratio. Momentum is definitely missing out, but this can be a good long term opportunity. Someone wants to go ahead with long term, then this can be a great opportunity.
Okay, good as a long-term opportunity. All right, but just one last question before we let you go, Kunal. What are your top picks at this hour? We're in the onset of Dhanteras as well, but anything that you're finding interesting in the markets?
Lovisha, so we shortlisted Ramki Infra, which is looking really good to us. The only reason to shortlist this counter was that on 7th October, this counter was up around 7.5 to 8%, and the volumes which was seen on that particular day were the highest volume recorded in last 5 to 6 years. And it's a clear higher bottom formation. So at 643, it's looking really attractive to us. The positional stop on this can be around 590. If the counter slips below 590, I think this entire uptick which we have seen from May till now might just come to an end. But otherwise, the upside potential on this counter can be around 800 to 850. So watch out for Ramki Infra. That's a positional bet. And the second, which you mentioned, was MRPL. We have shortlisted. We have not initiated a trade because the breakout of 155 is pending. So any tick above 155 can be a great buying opportunity in MRPL, and the targets can be 225 to 230 levels. So these are the two positional picks which we have shortlisted, not from the festive point of view, but purely based on the technicals and based on the price action formation.
Okay, all right. Those are the two picks that we'll be watching out for, Kunal. But with that, we have to let you go, and thank you so much for joining us and wishing you a very happy Diwali.
Same to you and your entire team. Thank you so much for having me on the show once again.
All right, let's take a quick check of the markets. It has been a strong day for the Lal Street because both the benchmark indices have surged for the second consecutive session, and Nifty is up and about for the second consecutive session with about 200 points gain, 1% gain coming in for the counter, and of course 25,600 nearly. That's where we have closed as well. Yesterday it was a 1 month high, and today we have built onto this gain, cemented those gains, we have moved forward from here on. Bank Nifty also, that is where the support sentiment came in as well for the benchmark indices. It's up about 600 points and nearly 100 points away from its all-time high levels as well. We'll be watching out for more of the banking giants, which will be reporting its Q2 numbers later in the weekend as well, and which will further put on the sentiment for how the entire financial sector is expected to perform on, given that we did see yesterday Axis Bank coming out with its second quarter results, where the management has been saying that the margin compression was on the back of the GST related changes, and they expect recovery from the third quarter onwards. But yes, overall they have been eyeing good growth from an FY26 perspective, and they remain quite positive for a mid-early teens growth for this financial year as well. But yes, all in all, it has been a good day for the markets. If you look at from a sectoral perspective of what did well, that is your Nifty Auto Index that showcased a gain of about 1% as of now. If you look at Nifty FMCG, that also did well with about 2% gains. Nifty Realty also held strong with about nearly 2% gains as well. And on the other hand, if you look at what did not do well in this market, that was your Nifty Pharma Index showcasing a mild gain of about 0.2%. On the other hand, if you look at Nifty IT Index is also showcasing a gain of about 0.3%. We will be watching out for more numbers that is coming in from Infosys just in a bit. We did see earlier that all of the IT majors, be it your HCL Tech, TCS, or even Tech Mahindra for that matter, did report a beat on majority of the metrics, and especially from the revenue and margins perspective. But we did see that TCS has highlighted some plans for AI business as well, and if we for HCL Tech also, they have highlighted certain progress towards AI related changes. So we'll be watching out what Infosys also plans to do. But yes, Infosys did settle in the red ahead of its Q2 numbers, and we'll be watching out what the management commentary and of course how does the growth guidance looks like ahead as well. So Nifty IT Index with about 0.3% gains. On the other hand, if you look at Nifty Pharma Index, that also showcased a gain of about 0.2%. On the other hand, if you look at Nifty PSU banks, that actually took a little bit of a backseat with about 0.4% declines coming in for the Nifty PSU banking pack as well. While private lenders did well in this market, but PSU banks was where the pain point emerged, and we could see some declines which came in from Bank of Baroda, Bank of India, Canara Bank, Union Bank, Indian Overseas Bank, all of them showcasing a decline of up to 1% or so. But yes, coming to the top gainers and losers of where we stand on the Nifty 50 charts, definitely the FMCG basket, that is where the sentiment was upbeat. Nestle, Tata Consumer Products, all of them showcasing a gain of about 3% itself. So it has been a good start for the FMCG counters, given that they expect the raw material prices to cool off in the upcoming quarters as well. Kotak Mahindra Bank also showcasing a gain of about 2%. Axis Bank also with about 2% after its September quarter results. But what did not do well, that was your HDFC Life on the back of its Q2 performance. 2% downtick coming in for there. Eternal and Shriram Finance, they were the other losers on the Nifty 50. But overall, it has been a good day for the markets. It has been a good day for Dalal Street, and we'll watch out whether or not we can cement the gains from here on as well. But yes, now let's shift focus and move on to our Moneycontrol's special Diwali programming, where we do understand the sectors that have grabbed the headline in summer 2081, what the way forward looks like, and some of the top picks from the space. So introducing you to another edition of Fireworks and Fallout Themes. So in this edition of Fireworks and Fallout Themes, we will be putting the spotlight on the new age space. Well, it has been quite a ride for the new age stocks in summer 2081, a year that did start with skepticism but gradually saw a shift in investor sentiment. We did see a turbulent post-listing phase, but several of the digital and tech-driven companies found their footing, delivering healthy gains, surprising the street with even improved earnings visibility, profitability and cost discipline. So from platform plays to travel tech names and even logistics and fintech players, investors have been hunting for value beyond the traditional business models. The market has also started rewarding companies that are showing consistent growth and positive cash flows and some sustainable margins, signaling that the new age tag is finally backed by solid fundamentals. But the rally hasn't been uniform. We did see some counters having doubled this somewhat, but others continue to lag, weighed down by some high valuations and weak operating metrics concerns. But yes, as the sector matures, the question now remains whether this momentum can sustain into summer 2082, or will the leg demand sharper differentiation and profitability proof. But yes, to help us decode the trends, valuations and what lies ahead for India's new age and universe, we are joined by Sachin Dixit, lead internet analyst at GM Financial. Sachin, wishing you the best of festivities and a very happy Diwali in advance.
Happy Diwali to you and your viewers as well. It's a pleasure being here.
Sachin, I'll start with the first question. The summer 2081 that has turned out to be quite a mixed year for new age stocks. Be it like we had some big winners like Car Trade Tech, Ixigo, and some laggards like Honasa and Fino. So, how do you assess the sector's overall performance this year?
Sure. This generally this somewhat, if you look at last whatever 12 months that have been part of it, has been quite good for most names. Overall, I mean, you obviously talked about Cartrade and Ixigo doing well, but even other names like Nykaa, Paytm, everyone did quite well in the last 12 months or so. As far as Honasa and Fino go, while I don't really look at them, so not sure exactly what happened there. But overall, I think there is a better understanding coming to the new age space where people are getting more understanding of what exactly to look for, how to understand these business models. Most companies, I mean, there is a reason why they call it startups because they continue to evolve at every stage. Right, Zomato is such, and it's a Nifty 50 company, but still continues to evolve quite rapidly. So I think there is more understanding that has come up to the investment phase businesses as well for these companies and how to decode different metrics. Right, most names in the internet or new age space, if you look at it, and if you try to look at them on a pure play PE multiple, which is the traditional way of looking at valuations, everything looks costly. But there is a reason why it works because once you understand the growth trajectory, once you understand what all goes into that valuation multiple, that's when things start to look more attractive.
Okay, okay. Sachin, but we have seen a resurgence in new age IPOs or even listings in India lately. So, do you think that the markets today are more favorable for new age companies than before?
I think it's both ways, right? Because some of these companies as well, before their IPO process launched, they did try to ensure that, yeah, they have a trend towards profitability, that they are actually guiding, or at least in terms of discussions, are talking about clear valuation multiples on profitability mostly. Most of the IPOs that are coming to market, unlike what we saw in the 2021 era, are already profitable or right there, right? So in that sense, I think it's both ways. Companies have also learned what public market investors care about, how to make those communications. Unlike the previous, like the 4 years back era, when a lot of companies came to public markets, no one was guiding towards profitability. And then some of the DIA in particular who uh, avoided some of these names in participation in the early part. Now you see most of the IPOs are actually led by DIAs because there is that understanding and there is that sort of comfort that's coming from the company side as well in terms of the communication they're getting. So I'll say yes, it's better. It's effort that has gone in both directions from investors as well as from the companies.
Okay, okay. Sachin, but now that investors have been hunting for value in these new age companies, how would you define the valuation comfort and what are the metrics that the investors should watch on going ahead?
So I think valuation comfort is quite subjective, right? In traditional space as well, you have companies which trade at 60, 70 times multiple and then at 10 times multiple as well. So what is happening in most of these names, as I alluded to a bit back, is that most of the companies are growing very rapidly. So a pure play PE multiple doesn't really work. One needs to look at a growth adjusted multiple, right? Something like a PEG ratio sort of things is what gives you that visibility on how the valuations look like. Furthermore, and this happens quite a lot in the discussions that we have with clients, is that a number of times discussions do hover on 2 year forward, 3 year forward sort of multiples, even 20, 30 multiples in some cases. Because when you look at from that perspective and factor in the benefit of growth that is coming to these companies, valuation comfort does emerge because then the valuations don't seem very costly. Obviously, when one is looking at a trailing basis, like fiscal year 25 multiples, if you are looking at, then the valuations seem quite costly, and I don't think anyone will get comfort. But once you build a conviction on the overall narrative, you understand how the growth is going to come, you understand how the margin expansion proposition is going to evolve, then you realize that those valuations are decently okay and valuation comfort starts to emerge.
Okay, okay. But Sachin, can they still deliver multi-bagger returns, or do you believe that much of the easy upside has been booked?
I wish I knew how to get multi-bagger returns, but largely, in terms of multi-bagger, it's a function of growth only. I mean, if you are looking at most of these companies which are growing somewhere between a 20 to 30% revenue growth with some margin expansion as well, right? So the bottom line compounding or the EBITDA or the earnings compounding is anyways somewhere around the 25 to 35% range, which effectively results in a doubling in 2 years' time. Right. So I don't think you will get quick multi-baggers like the stories that we saw in terms of car trade becoming 4x in roughly 1.5 odd years, or right, even more than 4x. Right. Similar stories have played out with PV FinTech as well in the past. Paytm also has seen a similar story. I think for those rapid multi-baggers to evolve, a very sort of crucial thing needs to happen, which is where there needs to be a very sharp discounting on the business models itself. Right? Paytm, from the price from which it became multi-bagger, was the price at which people were effectively factoring that the company will get shut down. Right? So from that angle, I do not believe that you have very easy multi-baggers available. But just by the growth trajectory and the margin expansion trajectory, most of these companies will become multi-baggers in 2 to 3 years of time.
Hmm. Okay, okay, that's right. But yes, Sachin, you from the existing new age stocks that is already listed, how do you calibrate the evaluation against the freshly listed peers? For instance, we have Urban Company or even WeWork India.
So, we are restricted on both the names that you took
Hmm.
in terms of recently listed because you are part of the IPO bankers. So, I will not comment on exactly on where they stand. But what tends to happen, and this is more of a generalist thing, is that in the initial phase, right, once you have got that initial narrative right and the valuations in the IPO price are decently benign for investors to come in, what we note is that the first 2 to 3 months do tend to be exuberant. The simple reason being that this is the time period when most of the pre-IPO investors are logged in. They are logged in for at least 6 months. Most of the anchor investors are also logged in during this phase. So effectively, there is only one trade happening in the market, which is largely buy, because anyone who wants to sell doesn't is not allowed to sell during this time frame. Right. So I'll say generally valuations tend to become more sane or more sort of consensus valuation starts to emerge after the 3 month period at least is ended, ideally after 6 months. But generally, the first 3 months, I'll say that you should discount most stock valuations that actually show up.
Okay, okay. Sachin, if you go by your recent report, it points to a steady sequential growth for the upcoming quarter. But what are the key demand drivers that you're watching out for summer 2082? What is it? Is it going to be consumption revival, festive uptick, or what is it going to be?
Yeah, so I think what we are factoring in terms of when we are talking about sequential growth is basically there is a general seasonality that happens in India, right? Q1 generally is a weak quarter for most economic activity. Q2 is when it starts to ramp up a bit. Q3 is when everything generally peaks. That's largely what we are factoring in. Secondly, what we have also seen happen this year is that there are multiple initiatives that have come from the government or the regulatory front, whether it's the income tax cuts that happened in particularly in the new regime, or interest rate cuts that happened by the RBI, as well as the GST cuts that were announced in September. Right, so all these three things effectively combine to drive more and more consumption, right? Which is why you see a lot of the consumption related names have done well recently. And that is also panning out in how basically businesses are seeing growth emerge. Obviously, there was a small period between, I'll say, early September to September 22nd, where there was also sort of a hiatus that happened because most consumers sort of curtailed their spending waiting for the GST cut to get implemented. So that's what is happening. Some of these initiatives are actually driving more money in the hand of buyers, which is also turning out to be the one supporting a lot more discretionary demand, which has been quite weak. If you look at the last 1.5, 2 years, India has gone through a very weak phase in terms of the discretionary demand era. I think a lot has changed thanks to the initiatives that have come up, and which is also going to get reflected in how the stocks perform in probably this quarter and the next.
Okay, okay. But you've seen that, majority of these new age platforms have turned a bit positive. But do you believe that it is sustainable in the upcoming quarters, or how do you see it panning out for the next financial year?
Completely. So, what you will notice for most of these new age names is that they are largely an operating leverage story, right?
Hmm.
So, if you believe that there is a conviction building on growth happening, most likely you'll also see that there will be sharp margin expansion that will come along with growth. You have obviously seen that happen in how, let's say, a PB fintech turned positive or profitable compared to what it used to be at the time of IPO. How Paytm, which literally bleeded in the early part of fiscal year 25, turned profitable again by Q4 and Q1 of this year, right? So in that sense, most of these stories are operating leverage driven. They all operate on a decently high contribution margins, which effectively results in, if you see that seasonal growth emerging, or if you have built conviction on how the next fiscal year is going to turn out in terms of growth, most likely profitability is going to be a given thing. You have seen that how car trade has happened over the last 1.5, 2 years, right? Their revenue grew by a certain rate, their profits like more than multiplied during the same time frame.
Okay, okay. Sachin, just one last question before we let you go. From a portfolio perspective, how should investors approach new age stocks in summer 2082? And tell us some of your topics from the space.
Sure. So I do like the space. Obviously, I cover the space, and we are very very bullish generally on the overall internet and new age story in India. I think we are just at the starting end of it. So generally, I'll be overweight on the sector. But what needs to be understood, and what is generally true for any investment period or investment category, is that one needs to be aware of the risk involved, right? Most of these companies are high beta stories. I mean, 5-7% moves happen like it's nothing in these names. And it has happened multiple times in the past year. I mean, when I say multiple times, I mean multiple days. It has happened that you see 5+% moves in either direction happening. So in that sense, one needs to be sure of what their risk appetite is, because the space is highly volatile. A lot of these stories are emerging. Some will play out quite well. Some might not be liked by the investors, right? We have seen what happened to some of these names when their profitability was not emerging. And you look at calendar year 22 era, when most of these stocks became like half or even lower than that. So generally overweight, but have that thing in mind that the risk appetite needs to be slightly high for most of these names. That's largely my recommendation for investors going forward in terms of their portfolio weights for the sector.
Okay, okay. Also, Sachin, tell us some of your top picks that you're watching out from the
Yeah,
new age
sorry,
space.
I
Yeah.
missed that part. Yeah. So in terms of new space, some names that we really like and we continue to be bullish on is that Paytm and Nykaa. Two stories, slightly at different parts of the puzzle. Paytm is emerging out of that disruption that happened in January 24. Nykaa continues to sustain a decent growth trajectory, so decent margin compounding stories there. So Paytm Nykaa remain one of the top picks. On the logistics tech, thanks to what is happening in terms of the consolidation in space, right? You see that delivery acquired Ecom Express, and there is generally a boost that is coming to demand side as well. I believe those stories should also play out well. Delivery, while might not be a very rapid growth story, but I think it's a very decent compounding story. Blackbuck is one name which got listed last year, didn't find much favor. Over a period of time, I think the stock has delivered brilliantly in terms of the operating leverage story that we are discussing. So decent name, obviously a different category. All the four names I think are quite different to each other, and depending on what one's risk appetite is, I'll recommend going ahead with them. Finally, First Cry, one name which has not done too well since IPO. I think the story in terms of the GST cuts and all, and how it benefits the overall discretionary environment, could play out in favor of First Cry. And if that growth starts to pick up, one will see that there will be also a sharp margin uptick that will happen in this name and could drive re-rating there.
Okay, all right. Those are the stocks that we need to watch out for. All right,
Yeah.
Sachin, but with that, we have to let you go. But thank you for joining us and explaining us the new age stocks and what lies ahead in so much of detail. And wishing you once again a very happy Diwali.
Thank you so much. Wishing you all a happy Diwali too.
All right, with that, we have come to an end of this edition of Closing Bell. Tomorrow, we'll be watching out more numbers from the second quarter performance, and we'll be also decoding another special sector, that is a consumer discretionary space, on our special Diwali programming. So come back for more. But before I let you go, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Moneycontrol app and subscribe to Super Pro today itself.